We have not one, but two individuals and corporations spreading false lies on Tesla. Even one of them, Elon Musk, calls out in a Twitter post. We have all of that for you and much more. Like, why in the world is Tesla stock down 2.5%? We actually got some good news on the home builder sentiment front of this economy. It looks like housing is cooling down faster than we thought. But that doesn't stop Goldman Sachs. They came out and revised their EPS estimates lower for Tesla next year, and this is also borderline a lie. We have all of this for you and much more here in this video. Everything you need to know from the technicals as well as broader Tesla and market news. Hit the like button if you are a current investor in Tesla stock, so everyone that clicks on this video knows just how many other Tesla investors have seen this video so far. A roll call, if you will. As well as that, hit that subscribe button if you guys want to stay up to date with everything going on with Tesla as well as the broader markets each and every single day. So this, I think, is what is having the biggest effect on Tesla stock today and causing the stock to drop about 2%. It is the note from Goldman Sachs. It says, quote, Tesla's position added successfully to in a significant development for the electric vehicle sector. Tesla has been wielding considerable influence through its series of price reductions implemented this year. This strategy, according to Goldman Sachs analysts, is anticipated to continue into next year, potentially affecting the company's profit margins. What they say here in English is you're probably going to get more price cuts heading into 2024. So you don't have a lot of time left in 2024, so they're saying you're probably going to get another price cut here in the next month or two. The price cuts primarily target Tesla's Model S and Model X vehicles and are expected to impact the company's financial performance this year. As noted by Goldman Sachs analyst Mark Delaney, these reductions are predicted to be only partially offset by increased prices for the Model 3, resulting in lower average selling prices across Tesla's portfolio and consequently affecting gross margins. Now, I think this is really false, in my opinion, a borderline lie for two reasons. They point out the price cuts of the S and X, but they don't highlight that that is only 4% of Tesla's total deliveries. The Model 3 is 29%. It's not rocket science to do the math and figure out that the Model 3 will make up all of the difference plus some as far as the margin for Tesla. Number two, there is no mention of the price cut of FSD having any effect to the take rate. And what I mean by that is the price of FSD just went from $15,000 to $12,000. The prior take rate of FSD was around 10%. You can imagine that the take rate of full self-driving went up at least a little bit. You don't have to be extreme with it. What if the take rate went to 11%? What effect would that have on margin? So I think this is really not a well put together piece and quite a disgrace from Goldman Sachs that has been around this long covering stocks. It doesn't take, again, rocket science to figure out the effect on margins on price cuts on 4% of total delivery volumes versus increasing prices on 29% of delivery volumes, which is the Model 3, and factoring in some variable change of a higher take rate to full self-driving, considering the price just dropped about 20% on that as well. Further price decreases are forecasted by Delaney for 2024 to boost sales volumes. This move is expected to counterbalance the earnings per share advantage gained from cost reductions. And what he means there is, well, Tesla's going to cut prices throughout the rest of this year, even possibly into 2024, and that's going to counteract any of the potential boost in EPS from cutting prices and having more vehicles actually get sold. In light of these developments, Goldman Sachs analysts have revised their predictions for Tesla's EPS, inclusive of stock-based compensation. The projected EPS for this year has been lowered from $3 per share to $2.90 per share, and their 2024 EPS forecast has been cut from $4.25 per share to $4.15 per share. What's actually interesting here is that these revised forecast numbers closely align with general market expectations. The consensus among analysts tracked by FactSet is for an EPS of $2.89 per share, so Goldman Sachs is still 1 cent higher than average analyst estimates for this year, and an estimate of $4.50 for 2024. That's what people are really getting out of this note, is 2024 EPS. It could be lower than consensus. Regarding Tesla's stock performance, Delaney retains a neutral rating with a 12-month target price of $275. As of early trading on Monday, Tesla shares had declined by about 2.5% to $267.51, despite having more than doubled over the course of this year. So I'm not so sure if I buy into this note from Goldman Sachs. They're basically betting that Tesla cuts prices again this year. And it's possible that we continue to see reductions on Model 3 inventory here in the US before the Highland is launched. But you're actually getting rumors of price increases coming in China for the Model Y. We just seen Tesla get rid of their standard range, just lowest end model of the Model Y, presumably to get more of the, 4860 battery cells for Cybertruck production, but they completely got rid of their lowest end Model Y model as far as pricing. So that's not going to have a positive effect to Tesla. People are just not going to buy the Model Y anymore. Come on now. The first big lie/rumor today for Tesla is, as Elon Musk says, yet another utterly false article from the Wall Street Journal. And this article reads, Tesla, Saudi Arabia in early talks for EV factory. Kingdom is trying to boost foreign investment but has contentious history with Elon Musk. This is clearly, utterly false, as Elon says. The second lie on Tesla is from the UAW president, Shawn Fain. And Sawyer Merritt says the UAW president is misleading here, including total compensation. Tesla actually pays their workers more than Ford or GM. And that's what Elon even said just a couple of days ago. Tesla pays more for GM and Ford, or for other UAW jobs. Sure, Tesla expects more out of you, as you can make more and rank up more in Tesla than you can in a Ford or a GM. So that's to be obvious. But take a listen to what Shawn Fain had to say about specifically Tesla here. It's quite out of line and, quite frankly, out of character in these UAW negotiations. It sounds like things are not going anywhere. Things are not progressing in talks with legacy OEMs.
Vehicles and still make billions in profits. It's a choice. And the fact that they want to compare it to how pitiful Tesla pays their workers and other companies pay their workers, that's what this whole argument's about. Workers in this country got to decide if they want a better life for themselves instead of scraping to get by paycheck to paycheck while everybody else walks away with the loot. Yeah. And, when we bargain good contracts, going back to the founding of this union, people join the UAW because we set the standard. People join unions because it's a better way of life. And that's what we got to do. We have to bargain a good contract, and then we're going to go organize these places and bring these workers in so they get their fair share of the economy that they get nothing of right now. Most of these workers in those companies are scraping to get by so that greedy CEOs and greedy people like Elon Musk can build more rocket ships and shoot themselves in outer space. And that's unacceptable.
Just by the tone of voice that Shawn Fain had in that interview, it does not look like these strikes are going the way the UAW had planned. Now, if all UAW workers do strike, there is about 11 weeks worth of pay for picketing for all UAW workers. So they don't have just an endless amount of time to strike. So the legacy OEMs might just be waiting them out. That looks like a reasonable possibility. This would not be great for the economy. As the GM CEO said, for every one GM worker, there is 6 other jobs that depend on that one GM worker. Well, that's not going to be a good thing for the economy as well. So we want to be watching this situation. The longer it goes, the harder hardship that citizens will face, the less money they will spend, the quicker we do head into a recession. To make matters even worse for the big 3, Unifor is gearing up for a strike as well. If you guys are unfamiliar what Unifor is, it is the Canadian Union. And both sides say that talks are complex as the future of automotive and manufacturing plants in the country remains up in the air amid the ongoing EV transition. Unifor selected Ford as its target company to negotiate with early in the process, but just last week rejected the automaker's first 2 offers, which said it did not come close to meeting our expectations. Now it seems as if a second strike may be on the horizon, according to Automotive News Canada. In some positive news for Tesla stock today, the Turkish president has asked Elon Musk to build a Tesla factory in Turkey. It cited Musk as saying that many Turkish suppliers are already working with Tesla and that Turkey was among the most important candidates for its next factory. Tesla did not immediately respond to requests for comment. Erdogan and Musk were speaking during a meeting at Turkish House, a skyscraper near the United Nations in New York. Turkey's state-owned Anadolu news agency reported. Erdogan is in the U.S. to attend the 78th session of the UN General Assembly. Erdogan also said during the meeting that Turkey was open to cooperation on artificial intelligence and Starlink, the satellite internet venture of Musk's SpaceX, and the communications directorate said. You know what's funny that keeps kind of getting pointed out to me? Where Wall Street says Tesla is not an AI company, it is merely an auto company, but yet all of these world leaders, these country leaders, want Tesla to build factories in their country and to initiate AI conversations. But yet Tesla is only an automaker, as most of Wall Street looks at it. Tesla has now added a manual rear door release to the Model 3 Highland. It says, according to Model 3 owners' manuals in countries where the Highland redesign is available, Tesla's added the manual door releases at the bottom of the rear door storage pockets. Each manual door release includes a plastic cover that should be removed in case a vehicle has no power. After removing the cover, users will see a mechanical release cable that can be pulled to open the door. Over 1 million vehicles were stolen in the US last year. The Tesla Model 3 and Model Y EVs are at the top of the least stolen vehicles list, probably because of the many cameras that are in Teslas and the GPS factors of a Tesla. Just like that story we shared about a month ago where someone even sold their Tesla. Well, not technically sold. They crashed their Tesla. The scrapyard sold the Tesla and it showed up in Ukraine. It's not very advantageous to steal at Tesla. Although we don't have actual numbers on how many Teslas were stolen last year, the number has got to be pretty dang low. Tesla has improved its reverse camera view in update 2023-32, and you can see, quite the difference here in clarity. Bill Gates apparently told Elon Musk years ago an electric semi-truck would never work because the batteries would be too big and too heavy. Well, turns out they work great. And this is because Pepsi just published an article that states one semi-truck traveled 1,600 miles in under 48 hours in California. Now, a lot of you guys don't know this. I've only said this maybe once here on the channel, but my grandfather, he's drove trucks for 30 plus years now, and he averages like 3,000, 3,500 miles a week. in a normal semi. So 1,600 miles in 48 hours is a lot. That is more than what he averages on a 24, 48 hour period. This is more than half of what he typically does in a normal semi in a week. So maybe the Tesla semi is even better than a regular semi. I'm sure the maintenance cost, the operating cost, are probably a lot better as well. It costs hundreds of dollars, sometimes thousands of dollars to fill up semi trucks. I'm sure it costs a lot less in energy to fill your Tesla semi battery. Elon Musk now says that X has 550 million active monthly users, up 8.5 million from 7 weeks ago. This is great news. Why? Because, well, the success of X, Twitter, whatever you want to call it, is very important for Tesla. If X does not do well, then Elon would more than likely be forced to sell Tesla stock. So any news pertaining to X doing well is great news for you as a Tesla shareholder. And if you guys haven't noticed, I am on X. Go ahead and look it up. Give it a follow. Come follow the channel over here. Come follow the journey with Tesla. Here in this video, you can see quite a few Highlands being loaded onto trailer beds, and this is over here in China with an obviously very large lot of Highlands getting ready for delivery. Now, what's actually interesting is the Highland has now been getting produced in China for about 2 weeks, but only just a couple of days ago did Tesla actually receive the permits to start delivering the Highland in China. So these vehicles are probably getting delivered to residents in China. Now, the Model 3 just increased 12% as far as its pricing. For other countries such as a France, a UK, a Germany, the price increase was only 3 to 5%. So the price went up a lot more in China, which I find quite interesting because they're produced in China. You would think China would have the lowest price increase and Europe would see a larger price increase, but that is not how things ended up working out. So this could actually be great for Tesla's upcoming earnings, and especially for Q4 earnings. In other Tesla stock news, the option activity we are seeing today is quite bullish, considering the 3% drop on Tesla stock today. You have seen 584 orders totaling $178 million with a positive order value of 64%. What does this mean? Well, odds are there's a lot of those long-term option buyers that are stepping in and buying options in Tesla, whereas you are seeing some near-term hedging. And again, this is because of the Goldman Sachs piece that came out today suggesting price cuts could be coming by the end of this year, in which I do not think that is the case. But it's possible that Goldman Sachs does have an insight to something that maybe we do not. I'm not going to be ignorant or blind to that fact. It's possible we do get a price cut. But I think it's unlikely, given that we just seen the Model 3 inventory get discounted as much as $5,000. The dollar amount that is currently sold short in Tesla stock is $22.84 billion, over twice as many dollars sold short in Tesla as you see in Nvidia, in a Apple, in a Microsoft, in a Google, and in Amazon. Tesla is by far the most shorted stock on the markets, and I think this sets us up for potentially a big upside move in Tesla. If we don't get price increases, if we get good news, you're very much prone to a short squeeze at any time. And what we're seeing on the technicals are also very encouraging. Tesla's stock fell a lot more at one point today. It was down about 4%. You actually hit the low today of about $263 per share. And what you're seeing today is you're finding support at this 8-day moving average. The 8-day moving average gets respected a lot when it comes to Tesla, right? You tend to find resistance during weak times, right, at this 8-day moving average. You tend to find support during good times at this 8-day moving average. So as long as we bounce at this 8-day moving average, which is $266.13 per share, Tesla stock is $266.15 per share. As long as you bounce here, that's great. Now, if we close under the 8-day moving average, that's not such a great sign, but I think you need a dollar or two close under that 8-day moving average to more or less confirm that lower prices could be to come. The next stop, if we do get downside, is that 50-day moving average at $256.26 per share. Now, one of the most encouraging technical signals that we have been getting recently is the MACD, and I've talked about this in quite a few videos. The MACD is at 2.77. The average move on the MACD, once you are negative and go positive like we have done recently, is a move to about 17. So you're at 2.77. You're going to need to see a move in the mid threes, or at least the lower threes, like 320 to 330, to get the MACD, in my opinion, back up to about 17, which is the historical average, again, when the MACD is negative and then does go positive. So there's a lot of technical reasons here why Tesla stock should continue higher. This could be just short-term noise, and the rest of this week could be much better. I think it really comes down to the Fed on Wednesday. On Wednesday, we are not going to get just some regular old Fed press conference and Fed meeting. No, you're going to get a summary of economic projections. Now, you're in September. So the markets, they don't care about 2023 at all anymore. 2023 is over. Markets care about 2024. Now, I took the liberty of highlighting what is important, circling, what is important to markets and what you need to be watching for. Go ahead and screenshot this if you're on your phone, if you're on your computer, so you can watch this coming out on Wednesday. These three things are really what matters. Now, the unemployment rate matters as well, but not nearly as much as just these three things. Now, it is the change in GDP for 2024. What you've actually seen is the Fed's estimates for GDP have been rising throughout 2023 from 0.4% by the end of 2023 all the way to 1% by June. Well, the estimates in March were 1.2% GDP in 2024. They actually went down to 1.1% GDP in 2024 during the June summary of economic projections. Now, does this number go down even further at this summary of economic projections? I would argue yes, and I would argue that would not be great for the markets. Question is, how low does it go? Does the Fed start to basically price in and tell the markets that we're heading into a recession or not? I don't know. That's what could ultimately move the markets quite a lot. And then the federal funds rate projection, in kind of coupling this with the GDP expectations. What I mean by this is you've basically seen the Fed reiterate this higher for longer in the summary of economic projections. Back in March, the Fed expected the Fed's fund rate by the end of 2024 to be 4.3%. In June, they revised that to 4.6%. Now, GDP also got revised down, like I said, for the June summary of economic projections for 2024. Now, does the GDP expectations go down and the Fed funds rate projections also go down? That would be signaling weakness for the economy in 2024. And that's how the markets would perceive it. That would be great because you wouldn't be getting any more rate hikes, like at all. But that would be bad because stocks do not do well during weakness in the economy. Now, 2025 federal funds rate projections matter a little bit, but not nearly as much as 2024. But same story here. If the Fed were to cut their projected Fed funds rate to 2.5% by 2025, well, that would probably be another sign the economy is not expected to do well in 2024. That's ultimately what matters. At this point, it's not about whether we get more rate hikes or not. If we do get another one, it's probably one. If inflation heats up again, it might be 2 more rate hikes. That doesn't matter as much. The markets right now are looking at, hey, is this the end of an expansionary cycle in the economy? Are we heading into a contraction in the economy, aka a recession? That's what the markets care about right here and right now, heading into 2024. So that's what you need to be watching for coming on Wednesday on the summary of economic projections. The news that we actually got today does support this overall logic that GDP and the economy might be slowing down quite a bit. This article says homebuilder sentiment goes negative for the first time in 7 months thanks to higher mortgage rates. The builder confidence in single-family housing markets fell 5 points in September to 45. 50 is the line between positive and negative sentiment. So a 5-point drop from 50 to 45 is quite the drop in sentiment for homebuilders. Now, the current sales conditions fell 6 points to 51, and sales expectations in the next 6 months also fell 6 points to 49. Buyer traffic dropped 5 points to 30. So you are way under 50. You're in way contractionary territory as far as home buyer sentiment. And even the current conditions fell 6 points. That's a lot. Not so great, at least as a sign for the economy. This news really shows you the economy is probably slowing down. The Fed might not be so inclined to raise rates as much. Hopefully that housing inflation does come down. What's actually interesting is the 2-year Treasury yield is up about 3.5 basis points today, which flies in the opposite direction of that logic. If this shows the Fed's probably not going to be raising rates anymore, it might actually be quicker to drop rates if housing inflation does come down, well, you would expect to see your 2-year Treasury yield fall. Your 2-year Treasury yields are very much dependent on Fed policy, and you're just not seeing these yields coming down. You're trading today at the highest that you have been at in this entire rate hike cycle. The 10 and 2-year yield curve inversion is continuing to steepen. This means it's continuing to uninvert. This is typically when you get the pain in the markets, is when you actually get this uninversion. And for the 10-year 3-month yield curve inversion, this is also continuing to uninvert, which is, again, typically when you get the pain actually in the markets. It's usually the uninversion happens right before the recession, and this is when you get the vast majority of the pain in the markets. From this period that I've highlighted in blue, really the inversion, this was back here in April of 2007, all the way to really the beginning of halfway through the recession. This is where you get the pain in the markets. Towards the end of the recession, the markets start to price that in, so stocks actually rally before the end of the technical recession. But as you can see, it's pretty clear. Back here in 2000, you uninvert, you go into a recession. 2007, you uninvert, go into a recession. Back here in 2019, before we even knew COVID was a thing in August of 2019, you inverted, you uninverted, headed into a recession. And now you've inverted, you're uninverting, and presumably heading into a recession. So that is going to do it for this video. We have another very important video coming out at 8 p.m. tonight, maybe 9 p.m. Just be on the lookout for that one. Hit the like button if you made it to the end of this video, as well as subscribe to the channel if you like how in-depth we go. Not only on Tesla stock, sure, we give you everything that's important on the day with Tesla, and we give you an in-depth analysis on the short position, on the option flows, on the technicals, but we also get into broad market topics like yield curve inversions, as well as daily news in the markets, and overall market psychology. This is really your one-stop shop for everything you need to know on Tesla and the broader markets. So subscribe to the channel if you like these kind of videos, as well as comment down below if there's anything I missed that should have been in this video. Let me know down there, as well as your expectations over the next couple of weeks for Tesla stock, as well as the broader markets. Now, if you guys want to come hedge out your portfolios with us, come trade with us live in real time, link down below in the description of this video. You'll find a link for that. We will welcome you with open arms. My name is Michael Tyler. Enjoy the rest of your day, and I will see you in the next one.